Good morning, traders. It is Friday. Happy Friday, the first day of October 2021. Sorry about the delay this morning. Just a few technical issues here. This is episode number 2085. Thanks for listening in. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the overall market posture this morning, mixed market posture as we come in after selling off in the equity market below yesterday's settlement. We made a recovery and we are trading in the lower end of yesterday's range. We extended yesterday's selling further down. The NASDAQ pushed as far as 14,500 or so. The S&P had pushed 4260. They just can't get enough of the selling. So mixed posture this morning. It looks like we're higher, but really we are not. There's a lot of range, a lot of volatility currently, and therefore it seems that way. But we do have a mixed market. The Europeans did not recover at all. They recovered some, but they're still negative on the day. The Euro Stoxx 50 down 42 basis points, the DAX down 50 basis points. We're still looking at the fiscal deadlock, this debt ceiling. Debt ceiling is becoming less of an issue as the Democrats work out their differences. The $3.5 trillion budget is now down to, is being negotiated toward somewhere around $2 trillion, as one of the senators that's holding this up is putting a cap at $1.5 trillion for a budget. And they expect that they'll settle around 2.1 or something like that. This is within the Democratic Party itself. And so there's some disagreements there. This is kind of a typical political shit show, as they say. But this is how things get negotiated in Washington. So that's where that stands. The market does not like the uncertainty, but also with these negotiations we get a smaller fiscal cliff. In other words, a smaller debt program for the budget, which is also market positive. Overall, you notice that as the equities sell off yesterday, the treasuries aren't really recovering, aren't really pushing higher. They continue to also be squeezed lower. So there's still a lot of pressure on interest rates. And that, my friends, is likely to have an impact on the markets overall, on returns and things like that, with banks benefiting and everybody else seeing higher coupon payments on their corporate bonds and things like that. So there's a big knock-on effect there, and we're really learning about economics here in real time. But this is what the market is concerned about currently, and it'll continue to be concerned about this going into the end of the year. We are in Q4 now. As we start the day here, and we are likely to see the beginning of the earnings season, and so that comes into play as well. What's on for today? We have the U.S. market manufacturing PMI final for September at 9:45 Eastern. ISM manufacturing, which can be a mover. At 10:10, we have several numbers. The Michigan sentiment at 10 is final for September, and that is not likely to be a mover. And then Fed's Harker at 1 p.m. Fed's Kaplan came out this morning and said that it's not expected that we would be raising rates at all into 2024, I think, something insane like that. Yeah. No, it's not Kaplan, it's Kashkari. I don't see the need for a Fed rate rise till 2024. So anyway, those are all the pieces. We're looking at the S&P 500 futures, multi-distribution profile, two major distributions with a big string of singles in between. having traded 476,000 contracts. That is really high in terms of volume. The overnight inventory is 31% short. There was a lot that was traded below yesterday's settlement, and the range is 60 points. 60 points. Expecting more volatility coming into today's session, given that information there, and that's how things. That's how we're looking at things coming in. So what about yesterday? Yesterday, if you recall, I'm going to not spend very much time on this. I was looking for the market to make an attempt make an attempt to push higher, be responsive a little bit. And at the time, I was looking for it to push into somewhere around 43, I believe it was 43.20, 40, something goofy going on here. 1 second. I believe it was 43.65 was where I was looking for the market to push higher. My charts are messed up this morning. This is why I started a little bit late. I'm trying to get this repaired right now. What is going on? Day session only. Give me a second. Okay, cool. All right. So I was looking for it to push into 43.65, push as far as 43.75. And then, as I said, that we're likely to hold steady in the middle there. We did build a channel overnight. And so the expectation is, who knows? But 75 was the over-under line. It was a key area that we wanted to watch yesterday. And so here we are this morning looking at what happened yesterday. And very early on, it pushed into 43.73, could not breach the 75. And from there, the selling kind of started. So yesterday did have a lot of rotations. We did see pretty good volatility. We saw good volume right from the get-go. And we didn't really see aggressive selling until we poke through the prior day's low. So we've been trading on an inside day basis. We poke through the prior day's low, and then let's get rid of these. Until we broke through the prior day's low and then held the mid VWAP, and then from there it just became a seller's market all the way through. So we continued to sell into the prior low. The prior swing low was at 43.94.75 or something, or 42.97.50, I think, something like that, or 42.93.75 is what I think it was. That's where the prior low was. We missed it by a tick. We held by a tick, and we finished at the low of the range in what is clearly a multi-distribution or a trend day profile. So going into the overnight session, we expect the market to continue lower. This is a very weak close. What you're seeing here is a market that is not able to find those buyers, just like we were not able to find the sellers forever. And so we're seeing a market that is not able to find those buyers. And so the most likely action from here is likely to be to find the next big price below, the big balance point below, and that was 42.77 right in here. That's the next big area. And that happens to be the overnight point of control. Very good structure there. And it did push through into the 60s, 42.60 even. However, we did balance out at the 42.70, and that became the launching point to come back in and be in the lower distribution of yesterday. So really holding sideways, expecting a choppy open today, expecting a pullback at some point before it starts to move towards the 43.30. So 43.30, 43.39 yesterday were key. I talked about those quite a bit. We did an impromptu at Convergent Trading, and I covered some of why I was expecting those areas to be key. These are key test areas for today. So 43.30, 43.39. And then I expect any test of 43.52 from below to be resisted. I'm expecting this area here to present some resistance as we come into it. So I'm looking for an opportunity to short that on the first run. So that's really where we are. Looking at the week, so let's pull up, let's just clean this chart up and just look at the bars. For the week, what did we do? Again, I drew this 2 days ago. We had a big drop, an impulsive move, a lower high. So this has to be seen as the pullback. So we had the impulse, correction, continuation, and yesterday was the continuation move, but we still missed the low by a tick. We did take it out in the overnight session. I know we pushed by quite a bit, by 30 some odd points, but still in the day session, we still didn't complete this move. Yesterday's high is very important, and yesterday's high is against that 75 area. Yesterday's high is at 73. It's against that 75 area, and so if that gets taken out, we're likely to see a very strong push back into 44.55. 44.55 is the next key area up, major area up. So this is that top right here, and then that brings us back to 4,500, and so on. I believe that given the macro fiscal overhangs, the issues that we have in Washington, the issues that China has with its real estate or property market, and the fact that growth is quite stunted, supply chain issues, logistics issues, the expense of shipping has gone up tenfold in the last year and a half. Those kinds of things are likely to be a drag. The semiconductor shortage is going to impact pretty much any industry that has electronics. It's already impacted automobiles, computers, video cards. It's impacted the crypto industry already. So to me, all of this is a lot of overhang and a lot of stuff to chew through for the market. And so we're likely to see valuations go lower. We're likely to see defensive positions. And to top it all off, we have this uncertainty with interest rates as the market is expecting interest rates to rise, which makes the cost of money more expensive. That's what we're dealing with here. And I've been talking about this now for about 2 to 3 weeks, that there's just a lot to deal with. And any push higher is likely to be resisted. And if we do push up today, if we do bounce today, I'm expecting that we would see the same kind of issues breaking through these key areas. Again, 43.75, 43.50 on the push up. Initially, 43.75 breaks the one-time framing down that's currently in control. Above there, 44.02, above there, 44.55, and so on and so forth, okay? So let's take a look at what's expected for today. So stock zones and master levels on, engage. Here we go. So what are we looking for today? It's been an exhausting week, folks. What are we looking for today? Immediately on the open, I expect to see how it pulled back here. Immediately on the open, expecting to push 43.20. Looking for 30 to present some resistance. Looking for this thing to go through the open, come back into the prior close and settlement. The settlement price is currently 42.97.75. Expecting it to go through settlement, and then I'm expecting this to come back into the lower distribution of the overnight session So we test above, take out the overnight stat to the upside, expecting this to present some resistance at 30, and then we're back to the overnight point of control, which is a 75% historical probability of a touch during the day session of the overnight point of control. And then I'm looking for this thing to stall, and then buyers are expected to come in and bring it to the open. So that's scenario one. We're looking at 30 up here. If 30 gets breached, it could easily run up into 50. 50 is another area that I'm looking to short. The areas to look for on the way down are 93. That's the former low that we could not take out, the prior weekly low. And then from there, the overnight point of control plus this MC point of control that we tested overnight, that's 77. I'm expecting it to make a turn around here. So I'm going to be stalking my order flow charts and signals for an opportunity to push back in, to push back up. Okay, that's the primary scenario today. Expecting the market to stabilize once we take out this low. Secondary, open auction that pulls back immediately, brings us back down to the 4,300 century figure, balances around here, and then we get our impulse higher back to the open, and then we start to push the 20, 30, and takes us up to 50, probably pokes through the 50, rebalances right here, resistance, rebalances, and then comes back in and finishes somewhere within the 1 Vol Sigma, which is at 43.34. So I'm expecting this to balance out. So this level right up here is the 50. That's the big area to test from below on scenario 2. Those are the two key scenarios. We're opening in range. There was no real value yesterday. It's a trend day. There's no value. The market was not able to find balance. And its job today, once it finds that bottom, is to find balance. And so once it does find balance, we're likely to get some slower, more carefully thought out opportunity as opposed to the frantic opens that we've seen where market on open orders are just squishing this thing. So good idea to stand by for the first 10, 15 minutes so that the market opening structure can take place and we start to get more information about which side is likely to dominate. It is Friday. I'm going to remind you, mind your risk. You don't want to go into the weekend with a big hole in your pocket. You want to be sure to come back the next day so you can build on what you've learned. Yesterday at EdgeClear, I looked at the risk screen for a sample of our customers. I don't see individual names on those screens, but just overall, a lot of people being in the middle, being conservative, slightly down, but pretty active. And then you have those people who are just buying and buying and buying a selling market and just destroying their accounts. I hate to see that. And then, of course, on the other side, the other tail, there are people who have taken on short positions and are making money. Past performance is not necessarily indicative of future results, but don't be one of these people that is betting too much on a trade and on a commitment to your need to be right. Act in your own best self-interest and just sample the market, step out of the way if you're wrong, wait for the next setup and the next coin toss. Good luck.